Welcome to Galaxy Brains, the weekly podcast from Galaxy Research. We burst into verse with the music we're making. See me at the finish line to take rings and learn about the power with the new Blake King, cause I'm breaking chains. Pull your stake up easy, verbal Khaleesi, and I'm fire breathing. Wired, never tired, like I'm flying through the breezy. Flip a couple coins, see me spitting on the TV. And I don't slip, dipping in my whip. Yo, I'm souping up my wheels like I'm pushing through a bip. Put my cold heart into space, rocket man like Elton, slamming every hater like Ben Shelton, and I'm done up. Y'all could see me on the run up. Ain't a drop shot gonna keep me from the come up. No hovering in place, take a walk real far. Yo, I'm covering the space like a blanket in the stars. As always, I'm your host, Alex Thorne, head of firm-wide research at Galaxy Digital. Thank you for listening to Galaxy Brains. We have a great show for you today. As I said, Blake King from Galaxy's Bitcoin mining team is our guest. We're gonna get deep into Texas power markets, how Bitcoin affects energy grids. It is a very interesting conversation about electricity that I know you'll enjoy and learn a lot from. I certainly did. And of course, we'll check in with our good friend Beimnet Abebe from Galaxy Trading, as always, to talk markets. But before we get to all of that, I need to remind you to please refer to a link to the disclaimer in the podcast notes and note that none of the information in this podcast constitutes investment advice or an offer, recommendation, or solicitation by Galaxy Digital or any of its affiliates to buy or sell any securities. I love this episode. I think Bitcoin mining and electricity are extremely misunderstood. They're much more complicated than the media will have you believe. And Blake is one of the world's foremost experts in the combination of the two. Let's get right into the show. Let's go now to our friend Beimnet Abebe from Galaxy Trading. As always, Beimnet, welcome to Galaxy Brains.
Thanks for having me.
So it's some exciting stuff has happened. Just since we last talked, BTC pretty much retraced the entirety of the grayscale pump from last week, which, I think a lot of people kind of expected. The ETF stuff was very anticipated and thus probably priced in a lot of ways. But we also just had another announcement or headline from Kathy Wood and ARK, and 21 Shares are filing for an ETH spot ETF.
Correct.
Just a few minutes ago. It's Wednesday, September 6th. I don't know. Is that a big deal?
I think it is pretty meaningful because, we've seen a bunch of ETF, like ETH futures ETF filings.
Yeah.
And the logic of the grayscale versus SEC decision was pretty clear. If you approve the futures product, there isn't much of a difference between futures and spot.
Right.
At least mathematically. And
they said that. They said mathematically.
Mathematically, there is no difference. And so if we're making the assumption that ETH futures ETF is going to get approved, the next logical conclusion is a spot ETF. And much like our guest from last week, Eric, from
James Safer.
James Safer, sorry.
Yep.
I agree. I'm a little shocked that there haven't been more filings for spot ETFs.
Especially,
and I do think it's more likely an inevitable type of situation because all these guys, like, they see each other and then it's one thing after the other.
There was that Bloomberg story, even at this point, a couple months ago, that said that the SEC was poised to not block those ETH futures ETFs. So I'm shocked that the spot wasn't filed sooner, to your point.
Yeah.
You could have filed it right then.
But here's the other aspect of it. I mean, ETH is dramatically smaller than Bitcoin, and there is much more institutional demand for Bitcoin as the story that resonates more with folks. And so I do think that some of the bigger players are just focused on Bitcoin
just one
because
foot in front of the other.
One foot in front of the other. It's also like you want to have products that people want to trade, right? People want to trade the Bitcoin stuff. The demand for the ETH stuff is not in the same magnitude.
Yeah.
Not that it won't be.
Sure.
But at least at the moment when trying to do a cost analysis, I do think some of the bigger players.
Bitcoin.
Yeah, exactly.
You got to do education and get it out on wealth platforms. And
yeah.
Okay, so let's talk about other stuff, because one of the other macro stories I saw is that the dollar is just really on a pretty big crusade over the last couple months.
No, absolutely.
Really pumping up higher. What is that? What impact does that have? Like, what does that mean?
There's a lot of implications.
Yeah.
Right.
Well, can we start with why? Why is the dollar going up?
The dollar is going up because more folks are believing in a higher for longer stance in terms of interest rates in the U.S. In addition, it's literally like the best house on the worst street, right? Japan is stuck at negative interest rates. There's a property bubble that's bursting in China, and they're actively easing and they're cutting interest rates, right? in places like the UK. You're having a wage price spiral. In Europe, you've had softening of data, material softening of data manufacturing and services, etc. Versus here in the US, I mean, we just had an ISM services that just beat to the upside. We had Powell's preferred measure of inflation, which is super core PCE, surprise higher, the week before. And then most importantly, in terms of this last, real leg in the dollar, I think it's a function of like energy prices, right? And we're seeing crude top $88 a barrel, so Brent top $90 a barrel.
Like not cut, or they're going to cut more.
They have cut, and they're committed to keeping that supply off the market. It comes out to like 2 million barrels per day, et cetera. But we're producing oil at like COVID levels right now, and that's on purpose because they have a quote unquote monopoly on energy markets.
Okay, so that's some of why it's been happening. But what are some of the implications of a stronger dollar? I know there was some fears.
So a stronger dollar means that, for any commodity importing nation, that the commodity prices are a lot higher, right? So if you're importing a lot of oil, like oil price went up and the dollar exchange rate went against you. And so it's like doubly compounded. And so for nations that are generally consumers of commodities, it's pretty bad.
Yeah.
And so that's a major implication. In addition, there's a lot of dollar-based debt. And so, the higher the cost of that debt as a function of interest rates going up and your currency rate going against you, that, fundamentally is going to lead to lower growth. In addition, right, like over 50% of S&P earnings are abroad, right? And so you're going to see earnings take a hit just from the FX impact.
Wow.
So if you're in a world where, growth is slowing because of, things like in China, et cetera, and you are, getting hurt on the FX side of things, I think it's pretty bad for stocks in my head.
And I guess most things too that are, anything priced in the dollar essentially gets more expensive.
Yeah,
and
absolutely.
So that also includes just assets of all types, right? It gets...
dollar strength, typically means those risk off. Yeah. But there's a lot of implications, and the question is like, can it continue? And absolutely, all of the structural forces are there. Like as long as Japan is stuck in negative interest rates, their currency is going to get challenged. And so, they're out there talking about currency intervention again, right? China's actively trying to defend their currency too. And so it's got, broad-ranging implications, but the beauty about the dollar right now is it's just such a great safe haven play because you get paid to be long the thing. It's positive carry to be long dollars.
Right.
And it's a hedge for shit blowing up. And so it's, we've spoken about this before, but it takes on these unique set of properties that become almost self-fulfilling.
Right.
And so that's kind of where you're at, and you're testing major levels across tons of different currencies. I mean, Euro looks like it wants to break 107. I think 106.5 was the low on the year. We're talking about 147, 148 on dollar yen. You're thinking about 150 in currency intervention like right now.
Yeah.
I think cable is, an absolute sale here. I think it's like 126 and change. Like it's, it's going to go back down. But then in addition, you're also having, some of the most popular like currency trades in the world, which is long carry and these things like MEX and Brazil, like those are starting to get unwound now too. And so there's like technical and things that are helping the dollar. And on top of that, you have, the Fed that seems like they're reasonably intellectually honest. And so when oil prices go higher, right, that's going to lead to increased higher headline inflation and core because, you can't strip out the energy impact. But to give you an idea, the Cleveland Fed nowcast for August CPI is a 0.79 month on month.
Wow.
Right? Analyze that. That's, you're talking about 10%. Annualized on the August number.
That's a lot.
That doesn't even have like the big spike. Well, it does have a reasonable spike in energy prices, but you're going to get another one in
more
September.
is coming potentially.
More is coming, and so if you're telling me the Fed is going to be looking at 0.79 inflation prints, like, and they're thinking about ending hiking policy.
Seems unlikely.
Seems so unlikely.
Yeah.
In what world would they have thought they hiked 500 plus basis points, 525 in short order in a year?
I was just going to ask
engaged in QT, and we're a year later, and we're about to print a 0.8 month-on-month headline CPI number. You could make a reasonable case that they're like monetary conditions are not even remotely restrictive right now. Home prices are still holding up well. You've had moderate crack in the labor market, but like people are still spending money. Inflation's still high.
Phineas was just telling me where he lives in Brooklyn. There's more bunch of luxury stores opening up. People are spending money at all luxury stores all around them.
Yeah. Eventually that has to slow. I mean,
you have to think so, right?
Yeah.
I mean,
but at the end of the day, I mean, we just have to think back to the magnitude of money creation that happened.
I guess it's just there's still
like
so much out there.
So much.
Yeah.
I mean, you printed trillions of dollars and you sent it directly to people.
They literally mailed it to people.
Literally mailed it to people. It's not like in certain instances.
What's this thing? Did you see this thing about the there was the program where you could get a big funding from the feds if you didn't fire people. I forget the name of this program, but as an employer.
Yeah.
And like people are still I read a story in the Journal a couple days ago about companies that have sprouted up to help, like consulting companies that have helped sprout up to help employers still be claiming this money. And it's like they've now claimed over 180 billion of this money.
Yeah.
More than double or something what Congress like it's just they're still pumping money. And they
are.
They didn't even realize it. Like,
I'll tell you.
It's crazy. People are still doing this thing.
No, people are still doing it. And like one of my strategists I talked to, there's still a reasonable amount of fiscal impulse left from all these programs and all that money that gets spent over the next quarter.
Right.
Which is insane.
They're still spending.
But there's also a lot of fraud and abuse in those programs.
Totally.
And the Fed, and the Treasury and IRS and all those people, they're coming after it.
For sure.
But you're spot on.
But in the meantime, it's out there and it's getting out there still.
Yeah.
I mean, in the IRS stuff, there's remember, there was the, what do they call it? PPE?
Yeah, PPE loans.
PPP program or whatever.
Exactly.
There was tons of fraud in that. I mean, we
Yeah,
found
I
out.
mean, that's what these-
but that money
what these
got out into the economy a lot of it, right? So,
well, here's the big concept here is that when you stimulate to people that have an insanely high propensity to spend, that money goes into the economy,
right?
And then that money has a multiplier. Versus, when you give money to, let's say, folks with a lot lower propensity to spend, aka rich people,
right?
Then that money
put it in assets.
They put it in assets, and it's got much lower velocity. And so what we did is we did the most supercharged version of it, and we
got inflation.
We gave people checks in the mail to literally
even better. They just dropped them right into your account. In fact, you didn't even need to apply.
Yeah.
I think they used your prior tax info.
It just showed up.
It's ridiculous.
And so there are going to be unprecedented consequences to that. And it wasn't just domestically that happened.
But I agree.
Right?
No, it was everyone did that. Yeah.
It's like, oh my God, in Europe, energy prices are real high. Don't worry. We'll print more money. We'll subsidize the cost. Don't worry about it.
They were saying
there are
yeah.
consequences.
Yeah.
You make more money. The value of things relative to those dollars will increase because you're just increasing the denominator.
100%. Very simple.
It's super
Very simple supply and demand.
And now I will tell you the most important thing we talk about today, I think, in this context, is fiscal dominance. I kid you not. I saw, one or two central bankers getting interviewed about, so Congress is going to, have another, huge deficit. Like, what are you thinking about?
Worse.
Might get worse. What are you guys thinking? Is a shutdown possible?
Right.
Like, what are you guys thinking about the fiscal? And these central bankers stand up there and they're like, we can't control fiscal policy. That is a policy of Congress. So our job is to react to it. But more and more, the one thing I believe about...
That's what you mean by fiscal dominance, that fiscal actually runs the sort of the monetary...
especially when you have a constraint, the government spends so much money that at a certain point, if they were to spend that money and fund it in the open market, it would cause havoc.
Yeah.
And so the central bank has to print money to buy that at a certain point. And at a certain point, their decision making with respect to how they set interest rates,
it's like their hands are tied.
Their hands are tied by the ability or the necessity to absorb that supply, not tied, but that's
impacted. And the
materially.
the more it
But then
becomes,
that's
the
not
more
an official mandate to accommodate insane
but they
levels of
literally have
federal
to do
spending.
it to control the
Absolutely.
situation.
But my issue is, like, they're so smart. They can see how disjointed Congress is. They can predict deficit spending pretty well. You know what? Don't predict it. Use the CBO's fucking estimates. Sorry. Like, oh, you want to claim that you don't want to, get involved in that? It's fine. Use the Congressional Budget Office and tell me how are you going to, respond to that. 3-4 years of, $1 trillion+ deficits. Like, you're not definitely going to be doing QT.
Right. You mean look ahead, right? Don't
Look
just
ahead
react.
and tell us, but if they did, then that would cause bigger problems.
Because we wouldn't like what we heard.
We wouldn't like what we heard. But they're all so smart, and they can do
It's
math
incredible.
out 5 years.
Oh my God.
That's the predicament all these people find themselves in. And the problem is, once inflation's an issue, right? It's only gonna get worse.
They have to act on it.
They have to. So they
they gotta. That's why it's so higher for longer. It's real, right? No cuts.
real.
No cuts are coming anytime
no
soon, right?
cuts. You got
Right,
short rates.
they're
short
basically
stocks,
off the table
long
at this
dollar.
point.
I mean, we talked about it 2
Yeah,
weeks
yeah,
ago.
yeah, we did, yeah.
Short rates, short stocks, long dollar.
Beimnet, this is great. It's just getting more interesting.
Yeah. I honestly, I want to dedicate an episode to just
We got to do
fiscal
it.
dominance.
We need to
and
do fiscal
central
dominance.
bank bullshit. Sorry.
Beimnet Abebe, Galaxy Trading, my friend. Thank you so much. Let's go now to our guest, Blake King from Galaxy's Bitcoin mining team. Blake, welcome to Galaxy Brains.
Hi, Alex. Happy to be here.
I'm really happy to have Blake here. We've been wanting to get Blake on the pod for a while. Blake is a power engineer by trade and does a lot of work with Galaxy's Bitcoin mining operations, which are big electrical operations.
That's right.
So they use a lot of power, but they have a lot of electrical. I mean, if you've ever been to a Bitcoin mining site, there's transformers and stuff on site. I mean, they are massive electrical infrastructure. How did you get into Bitcoin mining specifically? Because you came, to give us a little bit of your background, right? Because you come from power.
Yes, that's right. So I'm the result of Bitcoin miners moving more and more into the power and utility space. So I originally, like you said, I studied electrical engineering with an emphasis in power. And then I moved into the traditional role as a power engineer working at ERCOT, which is a system operator for the Texas grid. Worked there for a couple years, and then I moved on to a national lab doing power system stuff as well. And then all the time being a Bitcoin fan, I kind of moved into it.
Yeah.
Got introduced to it, bought a little bit, kind of slowly rolled into this Bitcoin thing is really interesting, and this mining thing is really interesting too. And I worked at ERCOT in kind of the system planning role, and I remember talking to other planners and operations folks about the wind curtailment, right? Which is this huge story about how we have to curtail these wind generators and they're not producing what they were. And I was like, what happens when we curtail their operations? Do we pay them for that? And they're like, of course we don't pay them for that.
Well, do they turn off the wind turbines? Mm-hmm. So they stop moving?
They stop moving. Yeah.
Okay.
Yeah, well,
kind of funny.
We can get into that, but it's
And they didn't pay them. Sorry, I didn't want to cut you off.
No, that's right. You don't pay them. So it's, because ERCOT is a market, right? And it's an energy-only market, which means you get paid for energy you deliver. So when the grid operator orders the wind turbines to turn down or the solar panels to turn down, there's lost revenue there. And I remember saying well, why don't we do something with the Bitcoin mining? It's a location agnostic. And that's kind of really where I started on the mining kind of part of my career. Was I started thinking we should co-locate these Bitcoin mines with these wind farms. They're losing
because they're out
all
in the
this
middle of nowhere. They can't deliver the power, right? There was maybe not sufficient transmission.
That's right. You got to go where the wind is, and that's usually where people are not. So there's a lot of transmission that has to take place. Those lines get congested, and it's not all the time that the lines get congested, but it is sometimes, and that's lost revenue. And so I just couldn't believe. I remember I couldn't believe that they didn't get any revenue. It's just lost revenue for them. So that's really where I started, and then I worked for a solar developer, which is basically, a shop that goes out, finds land, builds a solar, I say build a solar farm, but it's more bundles up all of the contracts that you would need to start building a solar farm and then sell that to somebody else who then actually builds the facility. So then I got kind of exposure on the business development and technical side of building generation. And then after that, Austin Storms and I, after years of communicating via Twitter, he joined Galaxy and was like, hey, we need a power engineer because we're developing sites in ERCOT. So
very cool.
That's kind of how I made it here.
Yeah, so we have sites in the Texas market. And what is it about Texas in general that's very positive for Bitcoin miners? There seem to be a lot down there.
Yeah, what was it? The Cambridge Institute is like 15% of Bitcoin mining is going on in ERCOT right now.
Yeah.
So the big thing, and they kind of bury the lead or bury the letter, whatever it's called in ERCOT, which is the big thing about ERCOT that's good is the spot market, right? There is a spot market for electricity where electricity is valued in real time and the price changes basically every 5 minutes. Right, that is unique to most electricity markets in the world, and it's unique to other vertical markets where there is no spot market for electricity. It's just you get whatever rate you get, right? So in ERCOT, you can, let's say you were only profitable if the price of power was negative. There's places in ERCOT where you could run 30% of the time because the price of power is negative for 30%. Like it's a really interesting spot market, especially for Bitcoin miners who are looking for that low cost of that low marginal price of power. And there's also like a pretty liquid derivatives market in ERCOT as well. I'm like, it's not as liquid as traditional commodities or equities, but you can basically buy and sell power pretty long term. And
so you can hedge, you can find. So is that market, that spot market, does that result in a lot of competition? I mean, is that what we get now? We get a lot of energy production in Texas now competing with each other.
You're talking about generation?
Yeah. On the generation side, does it result in a lot of electricity production, I guess is my question?
Yes.
It seems like it would, and that it would
that's
be
the goal,
good for
right?
consumers would be the idea because it's so competitive. Whereas, if I'm not going to dox any particular place or grid, but like if I'm in some other place where it's like, no, you just buy electricity from Duke Energy Progress. So I've doxed a region here by saying that, but right, like I don't have any other choice. There's nowhere else to buy at all. Like,
that's right. And if your mining revenue goes below whatever tariff that Duke can offer you, you're out of luck. Yeah, you just turn off, and there's no way for you to necessarily hedge that.
It, right.
That's right, and that's why people come to ERCOT is because as a producer who can turn off and turn on and be exposed to the spot market, it's really interesting for you on like a 10-year timeline, 15-year timeline as you're developing assets to see.
Right.
Okay, and as you said, with the competition on assets, a lot of this is driven, and if people look at ERCOT over the past 10 to 15 years, there's been an explosion in wind specifically and renewables more generally. Like wind is the massive winner in ERCOT, and that's because of the wind production tax credit that's offered, like a federal incentive, right?
Wow.
So basically,
and they have a lot auth as well. As well.
There's also a ton of
out
wind.
on what the plains.
That's right. Okay, so
West Texas.
So going back a little bit, so ERCOT in like the late aughts instituted something called the Competitive Renewable Energy Zone Project, CREZ. That's what it's called. And in CREZ, what ERCOT did is they went out and they proactively built a big transmission loop through the windiest area of the state, which is like up to the left of the panhandle. And basically, because there's always been this chicken and an egg problem with transmission and generation, back in the day, you used to be able to say, oh, they're building a coal plant. It's going to take them 8 years, so we have time to build the transmission to them. Well, you can stand up a wind or a solar farm much quicker than that. And so they were like, okay, well, how do we incent all of these producers to come and take part in all this wind energy out here? Let's proactively build this transmission loop.
Smart.
So ERCOT built it, and they came. They all came. So they all came, they all developed all these sites out in West Texas, and it produced a ton of wind. Like Texas is like the leader of wind energy.
Yeah,
in the
I heard
country.
it's the leader, maybe even in the world. If you looked at it a country, it's the biggest in wind.
Yeah, makes sense. And so, but the wind has like an interesting, I would call it a problem. Other people would just say it's a characteristic of it, which is that, they have pretty like parallel profiles, or I can't remember the specific word, but it's all producing at the same time, and then it's all not producing at the same time, right? Like there's one wind profile for that area.
Right.
And so what you get is a bottleneck in transmission where it's all trying to get out at the same time. And then whenever it's not blowing, the transmission lines aren't being used like at all, right? It's kind of a profile issue. And so this is really where the interesting use case of Bitcoin mining has come in, which is like there's times when there's so much supply that the price is actually extremely low, right? Like that's how you get the price of $0 or negative, is that you're actually forcing the wind to turn off, or else you're gonna overheat the transmission line. That's what prices negative. So now you had like this crazy supply that was mainly driven by that production tax credit that I referenced. And now there's a bunch of Bitcoin miners coming in to kind of like soak that up, if you will.
So they can sit next to the wind generation, perhaps, and either buy off the grid or take directly from the wind.
That's right.
If needed, right? Especially in a time when there isn't enough takeaway capacity for the wind. So they just give it right to the miner.
That's the put.
Yeah.
That's one of the business models that's really out there that I've seen from all of these co-locations. And you call it a co-location when it's a Bitcoin miner and a wind farm, and they share like a common meter, right?
Yep.
So the ERCOT market doesn't see
they don't really
the
exist.
netting.
Yeah,
Exactly.
as far as ERCOT's concerned, they're behind the meter, quote unquote, right? So it's like you co-locate with the energy generation. So this could be, by the way, I mean, I want to talk about it, so we'll talk about it now, but let's not forget, I've got more ERCOT related to Texas stuff to ask. But in general, is that how you see a lot of, maybe not all, but a lot of Bitcoin mining going in the future, that electricity producers, either at themselves or in a partnership, will mine right behind the meter, like that there'll be a place for them to offload some of their electricity in-house, basically?
Yeah, I think so. I think it really matters on how the deal is structured, right? So I kind of, I'm working on my analogy here, but the way that I kind of see it is it's similar to like gas wars. If you remember, gas stations used to have these wars where they'd go cheaper and cheaper and cheaper. But as a gas station, you could never really offer gas like lower than your cost, right? Like that wouldn't really make sense. Like maybe to win market share, but not. But if you take a wind or a solar farm, right, they might have a cost to get simple payback of like $30 or $40, which is like 3 or 4 cents a kilowatt hour, right? But because of how they offer into the market, they're willing to take $1 over 0, right? So their marginal cost is 0. So they're willing to sell at $1. But $1 would never really get them simple payback. That'd be a loss for their investors, right? So what you see whenever a wind or a solar farm wants to enter into some of these deals, right? Well, they're not really going to offer you any power less than their simple payback, right? Like, why would they do that?
Right.
Like they want simple payback for their investors. So that sticker price is a little higher than, say, if you were just offering what they're offering the grid, right? Because they're bidding into the market at 0 because they'd rather take $1. But if you want to sign them up on a long forward contract, now all of a sudden it's $30 or $40. So I think it really matters, and there are structures out there to kind of solve this, but they're kind of complicated, and no one's really shaken it out to where I've seen there's enough good upside for both partners. I mean, there are some deals that are pretty good. I think the answer is if it's structured right, you're going to see a lot more models like this. But as it stands, it's kind of complicated to get through.
And so go back to the wind for a minute too, because there's one thing a lot of people have said is that Bitcoin mining can help incentivize the build out of renewable energy generation.
Got it.
Clearly, the tax credits and ERCOT building the loop, the transmission loop, that incentivized the build out
For sure.
Does Bitcoin mining also provide some extra incentive? Is there a wind farm that isn't on the loop that wouldn't otherwise be built, but for a takeaway entity like a Bitcoin mine?
Yeah, I put that tagline of Bitcoin incentivizing. Like I've got basically a pile of taglines that people claim that I look at and I'm like, oh, there should be an asterisk. Like that's so much more complicated, and that's gonna frustrate a lot of people when they say that. I think the answer is ultimately yes, but it's yes insofar as like any demand would incentivize like any extra demand would incentivize a renewable project. Like whenever I would do development on the renewable side, right, you'd find a couple shortlist places on the grid that you were thinking about developing a site, and you'd run a model to see what the future pricing is, right? And if we had more than a certain percent of curtailment, we would just kill the project. Right. Just kill it. Like, or if pricing was just like a little bit lower, we'd kill the project. So of course, if you're going to add demand, it makes sense that would incentivize generation, right? Right. The interesting thing about Bitcoin mining, and I think is one that as the power system continues to advance, we're going to see the benefits more and more of, is the flexibility of their operation, right? And I think Harry had a good tagline on the episode the episode that you all had.
Yeah.
Was it last
Couple
month
months
or something
ago,
like that? Which is that the Bitcoin mine doesn't become a burden. Like it provides the demand, but then it doesn't become a burden. That's because you're so sensitive to the price, right? Like if you're a Bitcoin miner that can just soak up all of what renewables consider the low value hours, right? But then the Bitcoin mine also turns off whenever the grid is like a scarcity event. Then it starts to become a more interesting conversation of like, oh, it really is a buyer of electricity when no one else wants it.
It's like a buyer of last resort. Yeah.
That's exactly right. But and it's easy to say that, but whenever you're at these workshops and task forces and you actually see how the grid operates, like saying that Bitcoin mine is a buyer of last resort, and then seeing their operation where it's like sometimes they're on, sometimes they're off, there's delayed operation. It's like it's not a perfect consumer yet. Like I think we're going to get to a point where it becomes one, but just saying that it does a good job now, I think would be doing it an injustice. So.
Yeah. It's like if you have, part of it is that you can turn on and off like immediately, right? I think with
pretty much
with basically minimum, like in a couple minutes. And with, I would say, I mean, theoretically, I guess, I don't know, turn my computer on and off over and over again probably has some effect over time, but with mostly no technological effect on the mining machines themselves probably, right, to turn on and off. But it consumes so much electricity, right, that you're like an aluminum smelting plant, and you can't turn that off because then the aluminum hardens in the pots and breaks the whole plant, right? So it's like, it takes weeks to turn that thing off.
Yeah.
So it's that is that when you say the flexibility, that's what you're talking about?
That's exactly what I'm talking about. And it's I mean, you said instantly, it is pretty much instant, and there's a ERCOT task force right now. It's called the Large Flexible Load Task Force that is kind of meant to address some of these issues, right? So what we basically saw over the past year and a half is, the China ban, whenever that occurred. And then all of a sudden there was this influx of miners into ERCOT, right? And so they all requested capacity, basically, and certain transmission operators agreed. And then ERCOT took a step back after like a year and said, there's 30 gigawatts of Bitcoin mining that is supposedly coming online, right? Like ERCOT has a peak demand of 80 gigawatts. So we're saying, okay, half the Texas grid, like number one, like, is that real? Like, is that real?
Let's investigate.
Let's investigate if it's real. And if it is, like, let's say even 10% of that comes on, right? Like, this isn't like turning your computer off. This is like a third of the power going away all at the same time. Like, we can't do that. That's not how grids operate. Grids don't operate with demand that can come off and on so quickly. We kind of really have to do this. And what you've seen at ERCOT specifically is they've started to impose these ramp rate limitations, or they haven't started to impose them.
They're discussing it.
They're discussing it, right? They're discussing these ramp rate limitations, which is to say you as a Bitcoin miner can't turn off your entire load all at once.
You got to go a little smoother.
Exactly. You got to go smoother, right? And there's rationale for why they need to do this, right? Like ERCOT's been operating the grid a certain way. They have to manage that deviation in frequency a certain way. And some of those costs are borne by the entire grid, right? You can't exactly like impose the cost of a miner dipping off directly on the miner. You have to kind of socialize it. And so I think that's the direction we're going, where the miners are getting so big and having such a large impact. They're going to be treated more and more like generation used to be, or is treated, right? More limits, more size limits, more operational limits, things like that.
Interesting. So, and then maybe some of the mechanics we talk about from the Bitcoin mining side. We talk about how we got potentially cheap energy, lots of wind. There's lots of energy in general in Texas, right? Mm-hmm. We're not probably really going to go into it, but there's oil and gas in Texas, famously. Some Bitcoin miners do the flare gas mining thing, which is kind of like a behind the meter.
Yep, totally. It is.
But how then are Bitcoin miners structuring their operations? You've got a data center. You've got machines in the data center. You're connected to what? The grid directly, maybe also an electrical producer if you're behind the meter like we talked about. But then what are you actually doing? Are you locking in a long-term power rate with your generator or with the grid? And then what are you doing when you then curtail, when you do ramp up or ramp down? Like what's actually happening? You said the wind producers were not getting paid for that. We read in the news that Bitcoin miners are getting paid for this curtailment. Yep. What's happening there?
Sure. Well, it really depends on the structure, right? So let's just take the prototypical ERCOT structure where you're not co-located with any generator. You're just on the grid. You're in one of the deregulated areas, because ERCOT also has like vertically integrated areas. So just kind of got to, okay, you're in a competitive zone.
Yep.
And you want to be a Bitcoin miner. Well, the normal structure, like kind of the base, right, is you find what's called a retail electricity provider, a rep. These are people that are like ordained by the Utility Commission of Texas to sell you power. You know, they're like hand over heart. I know what I'm doing. I can manage risk.
They have a power generation facility, whether it's coal
or... Well, they can. Well, that's it. So, we're going to get into it. There's some of those that own both.
Yeah.
Those are called gentailers. Instead of retailer, they're gentailer. They have a certain interesting kind of like market power dynamic in ERCOT. But it doesn't... You don't have to necessarily. You don't have to necessarily.
So they sell it to you, but they don't produce it necessarily.
So here's how it happens, right? They can sell you power short. They can sell you fixed power.
Yep.
And they just wear the floating risk. It's a fixed for floating swap. If they sell you fixed power.
Yep.
What they can also do is just pass you through the floating rate, right? So like they wear your risk on the floating rate.
Yep.
And then they charge you for it after the fact, kind of like a receivables, because ERCOT bills them every day.
I see.
Right. So then once you have this kind of floating rate, then you can layer on hedges on top of it. So then it's like, okay, my mining is producing about $100 a megawatt hour. The current forwards for power where I'm at over the next year, I could lock in a rate of like, $70 or $60. Do I want to do that? Do I want to do that? And then
purely through derivatives, not through a fixed agreement with the provider.
Yeah, purely
through example.
Yeah.
So you can take the floating exposure to the whatever the spot price of electricity is, but you can obviously lock in a certain price based on how you hedge.
Yeah, the best way to understand is that's the base agreement.
Yeah.
The base agreement is you're exposed to the floating exposure. Then you can layer on a hedge or a swap. It really depends, because the retail electricity provider, they sell you power. Right. But they turn around and they can lock in a swap of the exact same size and shape and price, and then like sleeve it to you, right? So that's basically how you do it. And then you take title to the electricity, because it's not like a normal utility bill where they just bill you the fixed price as you consume it, right? You are now buying title to the electricity at that price.
I see.
So you're either consuming it or you're selling it into the spot market. That's kind of the best way to think about it. So when the spot price of power is $10.
So you have it. You have it to either use or sell back.
That's right.
And is that so? Then curtailing, which means not consuming.
Yeah.
But we still have these power units, so we can give them back to the grid.
That's right.
That's the idea.
It's like a firm. Yeah. It's a firm take or pay.
What is contract. What is this term? The fixed PPA. What is that?
It's a terrible term. It's a terrible term. Yeah, the fixed price. Yeah, there's so many different terms and so much different jargon. You kind of have to code switch wherever you're talking. Like a PPA. So in my world, a PPA is a long-term agreement with a generator directly.
Yeah.
Right. Like generators sell PPAs.
We're a natural gas electricity generator or a coal, whatever we are, nuclear even.
Yep.
We might go out of business. There is not enough people buying our stuff. Oh, great. Someone is going to agree to either build a factory or a car factory or some manufacturing or a Bitcoin miner.
Or a wholesaler, right?
Or somebody else has some other use for it.
That's right.
And they'll say, you know what? We'll agree to buy this much electricity from you over a period of time if you lock in a specific rate and then you negotiate that rate.
Yep.
Right. That's the PPA directly with
Yes. And then those are semi-liquid. Those are liquid as well. So it's not necessarily like I'm going to buy power 15 years out. That's the case for renewables, right? Because a lot of time for the renewables to even get developed, they have to sell their power forward first.
Right.
That's the only way the banks will finance them. But if you're a generator, right? Like when all this competition came out, like basically power trading shops would kind of take over control of the generating asset, like the natural gas or the coal plant. And they would basically enter into these swaps and do daily balancing of their risk. Like how much are we selling forward? How much spot exposure are we taking? Do we take some risk off the table? And again, this is kind of the direction where you're going with the Bitcoin miners, right? Like how are the forwards trading for off peak, on peak? Like, okay, let's take some risk off here. Let's like sell the hedge that we bought for November or December or whatever.
I mean, you literally trade them like financial contracts, and you also use them to hedge your actual thing, but you could speculate on them.
Well, that's what helps, right? It helps that I've got a mining asset that can cover the cost of my hedge, right? So it makes longing the market less risky.
Right. Makes sense.
You're no longer like a power trader where you're just going long or short. You've actually got an asset that can handle that.
Most of the big mining operations in ERCOT, then, they're not these PPA agreements with producers. They're more like what you're talking about, buying from a retailer and then using the financialized, deregulated market, the financial markets to hedge and lock in your prices and trade those.
That's right, because you're taking the risk, right? Like if you're a Bitcoin miner and you're only making $100 to $150 a megawatt hour, but if you curtail, you can theoretically sell this power for $4,000 or $5,000. Why would you not do that, right? Like there's no reason. Like it would take a really strong financial incentive for you, like maybe your host contract has an uptime SLA or something.
You have to stay on.
You have to stay on, and theoretically, this is what the market wants to incentivize. Right? Like there's no reason for this Bitcoin miner to be online if they don't want to be.
Course.
This is the price signal that you want. And this is where I kind of get frustrated when these people are like, "Oh, you can make more money not mining Bitcoin." And it's like, "Well, yeah, that's what you want. Like you don't want these miners to stay online during scarcity events, and the miner is also the one taking the risk, right? Like they didn't force someone to sell them power. Like someone was trying to sell them power and they did it."
And it makes sense too because it's obviously, I mean, a lot of these miners are publicly traded, or even if they're not, they have shareholders. Yeah. Why would they like, screw
Why
their
would
shareholders
you wear that
by
risk?
Yeah, by mining unprofitably? That no business would operate if they were unprofitable. And then also like that's the interesting thing about this ERCOT market is that like you said, the market is telling you it's naturally incentivizing what it wants, and when others need the electricity a lot worse than you should shut off.
You should shut off.
Right?
It's a functioning market, and that's why I think it's like a marketing problem of how people are like, oh, we made this much money curtailing, and it's like
Matt Levine had a blog, remember a couple
risky.
weeks ago that was like they're making more money not mining than mining. Like, haha, isn't that stupid? And it's like you're saying that's normal. That's how it should be.
That's how it should be. Yeah, and that's
for any consumer of electricity.
Yeah.
Right. If electricity, but theoretically, even my house, if electricity gets super expensive, like what should I do? I should turn off my lights, right? Like, I mean,
this is a whole conversation in like really niche power system economics of like, oh, we should expose more people to the real time price. And they actually had this in ERCOT. It was a company called Griddy. Yeah. I don't know if you've ever heard of this, but Griddy, back before Winter Storm Uri, actually passed like retail residential customers the spot price of electricity
rather than
a fixed rate contract, which is usually what they get sold.
Because regular people on their face like don't want to be like, oh my God, it's too volatile, I can't run.
Exactly.
But is the idea that like it would be a more efficient market? It would also make people pay the actual cost of it, and thus it would incentivize not running 85 lights at night. It would incentivize not
running your dishwasher at 7 p.m.
It would be run it overnight instead of during the peak hour, or buy more efficient light bulbs. Like it could actually help for, the environmental lobby theoretically could be for it. Because
here's the tagline: Griddy went bankrupt.
Yeah,
Griddy went bankrupt in Winter Storm Uri because they were unhedged, and in the winter storm when ERCOT experienced those blackouts, the ERCOT actually pegged, and I think it was the PUC, they pegged the price of the market at the cap. Right? Like so, ERCOT has an artificial price cap. Just like saying,
can't go over this.
Stop
price.
The bleeding, right? Like stop the bleeding. This is the cap.
It's like a circuit breaker.
They have a way to calculate this, right? It's like the value of lost load multiplied by the probability of losing the load. Anyways, they set it to the cap, and so the price of power was like $9,000 for,
just
days,
incredibly expensive.
Like days, yeah. So Griddy, who has to pay these invoices every day, right, was like, oh man, I can't, like these receivable risk on my customers at $9,000.
They're turning off. I'm not getting any money from them, right?
Yeah, or the customers are turning off, but they still have they have something. I mean, it's cold, right? They're running their heaters.
So they've got to deliver the power.
Yeah, and this is how most retail electricity providers in ERCOT do go bankrupt. Is they're short, right? They haven't bought enough long for whenever these high price spikes happen, and so they go bankrupt. And that's a tale as old as time.
It's such a fascinating market. It's so different than other markets in the U.S. Are there any other markets that are like this at all? Where are they? I mean,
PJM, New York, ISO. I mean, there's
the Pacific Northwest. Is that PJM?
No, PJM is Pennsylvania, New Jersey, Massachusetts.
But then northern New York, right? Is that what you're saying?
New York ISO, yep.
So
I don't have the footprints memorized. You'll have to forgive me. And then there's MISO, which is mid interconnect. Like
So
they all
these
have
ones
kind of
have
markets, right?
where you can do stuff. It's not all.
They're all extremely different. Like, like I'm
From
an
each other, even.
ERCOT guy.
Yeah, yeah.
Like it's very hard to find someone that's an ERCOT guy and a PJM.
Wow, they're
guy.
that
Like,
different.
It's incredible. Like
Wow.
it's so nuanced, and usually people spend their entire careers spanning like one or two of these markets.
So, like, well, every Bitcoin miner that's obviously in a place like this, and it's different if you could be anywhere. I was talking about the Kingdom of Bhutan is mining Bitcoin. They have a ton of hydro. I think they control I don't know if the electricity generation on that hydro is nationalized there or whatever, but like they are it's behind the meter there, right? It's not this type of mining. But if you're in any one of these markets, like what percentage of your staff is straight up like energy traders at this point?
It can't be much.
But everyone's got to have some.
Yeah, everyone has to have a certain people that know about the power strategy and kind of mesh it with the business model, right? Like, so you mentioned the hydro, right?
Yeah.
There is an opportunity cost to unused hydro. Like, what is that opportunity cost?
Right.
Would they want to sign a long-term agreement for $1? Or is it tied to some sort of simple payback expectation of the hydro, right? Okay, well, now you have Bitcoin price risk. What happens if the Bitcoin price tanks and now you can no longer afford that contract?
Got the long-term contract, right?
Yeah, so there's all sorts of business models, and I really don't think this is shaken out. I think we're still at a point where the Bitcoin mining revenue can support many different business models. You've got people still mining in vertical utilities with fixed rate tariffs. Like it's my hypothesis that those are going to be the first to go, right? Like there's just not really going to be a vertical utility that can offer you a fixed rate tariff.
They can't offer long term. You may not be able to guarantee you can buy long term. There's no good way to hedge.
Yeah. So how long do you build an asset? Like, do you underwrite a substation for something that you don't know what the whim of the public utility tariff is going to be in 3 years or 5 years? Like
this is why that Texas with the floating rate that you then hedge is
you can
brilliant.
always just take spot rate exposure, right? And then, like I said, there's 30% of the time that West Texas the power is negative.
Buy it, trade it, speculate on it, use it, sell it back, right? Or use it.
Or use it.
Or mine Bitcoin with it.
Yeah, or use it. And
the economics make sense. Yeah. It's much more flexible.
That's exactly
I understand that. Do you think, what about nuclear? Nuclear is an incredibly dense, so uranium's an incredibly, I forget the exact term, incredibly dense electrical source of electricity, right? Like the tiniest little amount of uranium can produce orders of magnitude more electricity than the same amount of wood, which is an incredibly not dense.
And the waste as well. It's extremely dense.
Yes.
People always, that's always the first thing that people say, oh, the nuclear waste. But then you actually find how much nuclear waste is generated.
It's
really small.
Yeah.
It's
also, they figured
amount.
this out too, where there's a lot of NIMBYism about they wanted to build the nuclear waste facility under the mountain in Utah or whatever. And then people were like, oh, we don't want the nuke waste there. Isn't it radioactive, right? And it's that's actually been solved, to be clear. There's a great uranium influencer, Isodope, who she's gone and hugged them.
I think I've
they're
seen
totally not dangerous. But do you think doesn't nuclear seem it's green? Its only emission is water vapor, right? Doesn't it produces enormous amounts of electricity?
Yep.
But we have neglected our nuclear regulatory infrastructure, and we don't have any new nuclear plants. Do you think?
That's the Volti plant. I think Volti just came online. Which
So
that's the only one, right? There's only one.
Bitcoin miners, are they going to mine behind the meter on nuclear? Is that going to incentivize a nuclear energy generation revolution? What do you think?
Oh, goodness. That's a tall order. I will say my stance on nuclear is probably pretty common in the Bitcoin industry, which is that nuclear as a base generator makes a lot of sense, right? It wants high uptime, right? It can't really ramp up or down that well, so it needs to be on all the time. And
which is good for the grid.
Which is great for the grid.
Yeah.
Right? So that it's got all the normal good attributes of a base generator that I would see. Now, my issues with it are kind of practical, which I've heard talked about on your podcast, which is that the red tape associated with developing a nuclear plant is crazy.
I think
right?
it's practically untenable.
It's insanely expensive
Yeah.
as well, and that's part of it. So whenever people ask me, is there gonna be a revolution? My quick answer is not in the next
not with a
10
major
years.
regulatory change.
Not without some sort of huge change. And especially with all the solar and wind that's coming online, right? There's so much solar and wind that's already being incentivized to come online that causes those weird price floor scenarios, right? So it's going to come to a point where it's would you rather do a front of meter on grid site where you're just soaking up that negatively priced energy, or sign a 10-year PPA with a nuke facility for, $25-30.
Right.
It comes down to that scenario. Like, what is Bitcoin's place? Is it just soaking up all the mispriced, energy, or being this co-located buyer of last resort, which the nukes are now also getting production tax credits as well. That was kind of part of the IRA.
Oh, nice.
Nukes are now going to be incentivized as well on the same kind of floor. It's not, I can't remember the sticker price off the top of my head.
That's positive, though.
They're coming. Yeah.
Yeah, it just seems to me like even with wind and solar, there's significant e-waste in particular.
Oh, yeah.
And I've even heard stories. Maybe you know about this from your time in solar too. But there was a story like recently in online, like a headline a couple weeks ago or something. They called them streakers or streamers. I can't remember, but it was that birds will fly over the solar farms and just basically vaporize because it's reflecting so much heat. Like the air above the solar farm gets so hot. But also, it's like, is all the grass under the panels is dead, right?
It's dead.
Right, and the wind. I don't know if you've seen the piles of the old turbines. Like, I mean, it's as bad as like the piles of old cars and all the other waste that we have. Like, whereas a nuclear plant has none of that. Like, is that anyway? It's a little bit of a tangent here, but
no, it's certainly an externality and one that gets kind of brushed over whenever people.
I think so.
It is. I agree with you. I don't really have that too strong of a stance on renewables, when it comes to climate change and things like that. I think I hold two things that are seemingly kind of true at the same time. One, I don't see how humanity can not have an impact on the climate. Like with the amount of gas that we're pouring into the atmosphere, it just seems intuitive to me that we would have some impact, right? Like, I don't know what that is, right? But something. And then on the other side, I see these reports of like very precise measurements of like, the globe is like 0.1 degree hotter. And I just think that like there's no way that we can get that accurate of a measurement of such a complex ecosystem. And I hold those two things, those kind of battle in my head. And I've gone back and forth on Twitter with some people about this, where they've tried to get me over the edge with like, these precise reports that describe how they did the methodology. And I'm like, I'm sorry, I don't know, I just can't get there.
F. Scott Fitzgerald said the test of a true first-rate intelligence is the ability to simultaneously hold two contradicting ideas.
Is that right?
So that doesn's surprise me. That I think I feel similarly. I mean, I think there's plenty of anecdotal evidence. But anyway, and also then there's stuff like about 10,000-year solar cycles and stuff like that can affect temperature too. But I do think that e-waste question is overlooked for renewables, and for solar and wind, it can be pretty bad. But they also create energy in a totally renewable way, right? Which is very positive.
No marginal emissions. Yeah,
right.
and the impact on the electricity system is astonishing too. Like people don't really understand, but there's a full throttle like reworking of how power markets work with all this solar and wind. Like if you go back even a few years, the riskiest moment on the grid was the time of peak demand, right? Which was like 5 p.m. There's so much load on the system. There's just not enough generation to meet that. Like that's the risk. Whereas now the riskiest interval on the system is really like when the solar is ramping down and the wind hasn't ramped up yet, or it's all bespoke
it's like
to like which
stuff,
grid.
though,
It's really based on the forecast of wind and the sun and the load, because now you've got all these forecasts going on. And it's like, we can handle the peak of the day, no problem, because we got all this solar pumping through. And this has tons of impact on how the people that operate the grid actually do it. How much capacity do they need to procure in order to meet that? So,
it's wild because the grid is alternating current power. It has to stay on all the time, right? Like, there's
constant matching.
Right? And whereas wind and solar are intermittent.
That's right. So it's all forecasting, right? Like there's folks, at ERCOT or PJM or whomever, like there's entire teams of people dedicated to tomorrow's forecast. Like tomorrow's load forecast, tomorrow's solar forecast, tomorrow's wind forecast, because you got to imagine there's 1,000 different generating units, right? They're each submitting different plans. We're going to be online. We're going to be offline. We've got maintenance. We've got forced maintenance. We've got an outage. And then there's transmission line. And so there's a whole team of people working on tomorrow. There's a whole team of people working on next week. And then you've got in the control room, there's people working on the next hour.
Right now.
And it's just, it all comes down to managing frequency of
incredible.
In that moment, we got to keep frequency between, 60.00
really
or whatever and 59. It's amazing. It is an amazing
How
machine.
far Bitcoin has come from Satoshi mining on his CPU to really being an integral and major part of the world's biggest electrical grids.
Yeah. It is incredible. My only hope is that the conversation can get a little more nuanced. Like, I know it's tough to just Bitcoin fans in general want to say things like, it incentivizes renewable energy or it balances the grid, or things like this. And it's like, oh man, that's you really alienate a lot of people that
in the power world.
In the power world, exactly. Like they look at that and they say, balances the grid, what are you saying? Like, yes, you turn off, but that almost causes more issues. You're not telling them exactly. And it just feels like the conversation is lost, and we kind of alienate a couple people
Look, I mean, you got to communicate big ideas with digestible ways. It can be very, and this is complicated. To your point, even if you know about it somewhere, you don't know about it there.
Yeah.
Right. Sure. If I know about it in Texas, I don't know about it in North Carolina. They're very different. So, or I mentioned one, Bitcoin as a battery. You heard me say this. What do you think about that one?
Oh man, that is got to be. I have done so much work. I can't remember what it's called on the internet, where if you say one wrong thing and it takes
there's somebody's law or whatever.
I can't remember what it is. But
you mean when you say something wrong on the internet and then you get corrected, or
no,
it's the level of the BS. It takes a lot more effort to counter BS than it does to create BS.
But I get it. Even Saylor comes out and says it's digital energy, and stuff like that, and it's like, oh man. It's really not, though. Bitcoin is more of an industrial, it's better to think about it as just a widget maker. That's it. It can just make widgets so much better than anything else in the past, right? It can make widgets and it doesn't even have to sell them, right? The Bitcoin network is the off-taker for Bitcoin. Yeah. And that in and of itself is amazing. But the whole Bitcoin is a battery thing, I mean, I don't know.
It's not literally a battery.
It's not literally a battery. And I have.
By the way, it is. I was right. It's called Brandolini's law.
Brandolini's law.
And it's it's something. I'm going to say this. It's the principle of bullshit asymmetry. That it takes a lot more effort to refute BS than it does to create it. I think the battery idea theoretically is that because you can use electricity that you have now, and that you may not have later, or you may not want to use later, to create transportable money
value,
transportable value. And so you're storing the electrical spend in the Bitcoin.
But that's the same.
But it's a very simple.
That's the same as gold, right? It's the same as you're expending work
really anything,
to get
to your
gold.
Point, any widget you create that could have value later.
That's exactly right. The thing is that battery has a very specific meaning in the power grid,
right? Exactly.
Right?
That's the thing.
The whole thing about batteries is that they can inject in electricity.
Right. You can't take the electricity back out of the Bitcoin and put it back into the grid.
That's always the first.
That's
statement.
literally what a battery does.
But I get it. There's something tangible in what Bitcoin can do for the grid. And just saying that Bitcoin allows people to long power is just not as fancy as it's a battery or things like that. I mean, there's the great way to understand is that Bitcoin's just buying electricity, and as soon as that electricity becomes more useful for someone else, right? Bitcoin can just relinquish that capacity, right? Like a generator that could have been curtailed or could have not chosen to be online was online, because they had a customer in the Bitcoin miner. And that miner can then relinquish that capacity if it wants to. And so, my thesis and a lot of people's thesis is that hash price is going to continue to trend down, right? Because you've got tons of miners that are now set up to where, the spot price, or they're hooked up to curtailing generators. That hash price is just going to continue to get pushed down and down. And what you're going to see is the Bitcoin mining revenue dollar is going to continue to get lower and lower, and to the point where, the area under the curve where miners are consuming is cheaper and cheaper. So you're no longer going to see Bitcoin mining as, a competitor to residential customers, right? It's just going to seem absurd on its face. It's like this Bitcoin miner's curtailing at $40, they're not really a competitor. And that's going to make the conversation a little bit easier that we're having with these traditional grid people, because, we tried these arguments on them. Bitcoin miner, it's a consumer of first resort or last resort. And they say, well, not really if you're consuming at $150. You're actually competing, and you're driving the price of everyone up, right? Because it's a marginal market. So any consumption raises the price. But if you're curtailing earlier, I think that's where we're trending, and that's going to be a much easier conversation.
So some of the things that we've said as Bitcoin advocates are becoming more true over time.
Yes,
that's
right.
Is that the positive spin?
That's the positive. That's the positive spin. Yeah, I agree.
Yeah, it's just such a complicated story. It really is. Would you say that Bitcoin electricity coin? Wasn't like there's that Henry Ford headline from an idea from the 1920s or something that money should be based on energy because it's the universal value. Yeah.
No, and it's the mining side and also the transmission side. I mean, to transmit it anywhere in the world within one block if you want. I mean, that's incredible. Yeah. It's incredible. And to be able to mine it and not need an off taker. Like when I was working at the solar company, I would model the Bitcoin mining side by side with, hydrogen or concrete or something like this. And it's just like, oh, the story is so much more simple. Like I'm literally feeding the machines with electricity and, Bitcoin is effectively coming out of them, right? Like I don't have to store the hydrogen. Like I don't have to transport the hydrogen. It's amazing. It's a really amazing thing to be a part of and experience and build. Yeah.
So you mentioned earlier, Blake, about the winter storm Uri, right? What was that, like December 2021 maybe? Is it 21?
I think it's right
22
after
actually.
February.
I think was it last year? I can't remember. 2 years ago.
It's either February of 21.
Time is a flat circle and an illusion. But we've talked a lot about the Texas grid. It's very interesting and unique. It's at the forefront of this deregulated way of running a grid. But it gets a lot of hate in the national media for like the blackouts during Hurricane Uri or people saying it's fragile. Is that true? Is it fragile? Because to me it seems very competitive and therefore dynamic.
Yeah, I would agree with you that it's not as fragile as it seems. I think it's a victim of the transparency in kind of a weird way. Like the prices are so transparent and it gets so much press that whenever these things happen, it becomes a bigger story than it otherwise would.
Like you got data and all this reporting.
Yeah, that's right. And it's also, like we said, the whole wind revolution, right? So it's kind of like the poster child for whenever people want to say overinvestment in renewables, lack of investment. ERCOT is kind of like the perfect poster child to put that up as a bad thing.
But so in other energy market, electricity grid, again, I grew up in New England. It's actually finally getting to be well known that the grid is in deep trouble in New England. They're literally buying
That's right.
giant tankers of natural gas from like abroad because of like the Logan Act and weird regulatory reasons why and then people have blocked a lot of pipelines in the area for environmental concerns, but like that's not stopping us from consuming up there. And there've been fears in many, because New England can have really bad winters, that there could be devastating blackout. A lot of that region also uses heating oil for heating, which can be very expensive, and of course they don't produce up there. Anyway, it's very opaque, and people didn't really realize this. Or if we talk about in general a more opaque, a totally regulated monopolistic grid where there's one producer and you don't really know what's going on, right? Those could be fragile, and we just don't even know, right? I mean, there's no transparency at all.
Yeah, it's basically how does the risk present, right? Like the risk presents as low and then all at once, right? So like with ERCOT in Winter Storm Uri, right, people always cite, the renewables, but what really tipped the scales, and you can go back and you can look at the reports here, it was correlated natural gas outages where pipes froze, right? And because there's so much just-in-time natural gas-fed generation, that was really a huge problem that wasn't addressed in the planning. And there had been, some 4 gigawatts of coal retirements in 2018. So, when everything is good and there's no winter storm, people look at the coal plants and say, well, this is an expensive, dirty, 50-year-old coal plant. Let's just retire this. And they run the study and it looks good and they retire it. But then there's some correlated natural gas outage. And then ERCOT also had a nuclear unit trip, which is just any thermal plant can trip for a myriad of reasons. It's not like just because you're a thermal generator that you're going to be up 100% of the time. There's forced outages, there's maintenance, there's all sorts of things that happen. And it was really this convolution of all of these different things happened that caused Winter Storm Uri. There was, wind derates, of course. There was the nuclear unit tripping, which you never want to happen during the peak winter storm event. And then there was all these natural gas outages. And then, because of this, ERCOT has, publicly addressed, we're doing weatherization. We're creating a new product for firm fuel, right? So now there's a new product where you have fuel on site, not just in time natural gas pipelines, because coal is really easy. You got pyramids of coal on site. You don't have to worry about just-in-time pipeline. And that's the same for New England and things like this. This is really what this incentive to get off of fossil fuel is kind of doing is, when times are good and it's easy to study the retirement of these different thermal assets that have been online for decades, you go ahead and retire them, and then all of a sudden you get left with this Rube Goldberg machine where it's like, yes, we don't have that much fossil, but we're also importing a lot of fuel from our neighbor, or a lot of power from our neighbor, and what does their fuel mix look like?
Right.
All of a sudden you've just kind of shifted your liability onto someone else, and reduced your own independence. And so it's kind of an interesting thing that we're going into now, where everyone's just kind of changing the shape of the problem of
It's really interesting the amount of different strategies that grid operators are doing. And I was asking you before, like worldwide, like is Texas an anomaly? Is it out on the fringe of the deregulated idea? Like where does it stand, and what do other people do?
Yeah,
so just in general in the world, like
this is a really deep topic. Like you are just scratching the surface of power market structures. I mean, people spend their whole careers thinking about this.
Right.
Texas is on the forefront of deregulated electricity market design.
Granular.
Right? Like granular. Yeah, so Texas has a nodal market, right? So basically every substation in ERCOT gets its own price, right? And so in intervals where there's no congestion, like 15-minute intervals where there's no congestion, each one of those prices on each substation is the same. But then, like we were talking about earlier, if you have a transmission constraint, then maybe those specific substations over there have lower pricing, right? And so there's this very kind of granular market that you can get extremely efficient. And the whole purpose here is, there was people like me on the solar development or wind development or natural gas development side that have all these different substations to pick, right? And they can pick that one substation, they can run a model and say, okay, what does the pricing look like? How often does this substation congest, right? You can get really into the nitty-gritty efficiencies of the market. And there's other markets like, you mentioned, there's Duke and other vertical integrated utilities where, there isn't an army of different people trying different strategies. There's the planning department at Duke, and they're trying to optimize for how can I most efficiently run this market. And it is an ongoing debate on what the best outcome is going to be. Does this market produce the reliability that we want? And in ERCOT and other free markets like this, it's a constant stakeholder-informed debate. Like ERCOT has meetings monthly, weekly of, we need the reserve margin to be higher. How do we incentivize that? How do we change the pricing structure? It's really interesting.
Wow. So, this is great, Blake. Thanks so much for coming on Galaxy Brains. Blake King from Galaxy's Bitcoin mining team.
Thanks for having me, Alex.
That's it for this week's episode of Galaxy Brains. Thank you to our guest, Blake King from Galaxy's Bitcoin mining team. What an interesting conversation. So much going on there in Texas and power markets and Bitcoin. I can't believe how different all of the electrical grids are, too. It's just a giant patchwork of wires and energy generators feeding this world with electricity that is just different everywhere. So interesting the role Bitcoin mining plays in that. And of course, thank you to our friend Beimnet Abebe from Galaxy Trading, as always. Look, everyone have a safe and happy weekend, and we will catch you next week. Thanks for listening to Galaxy Brains, the weekly podcast from Galaxy Research. If you enjoy the show, please like, rate, review, and subscribe wherever you get your podcasts. To follow Galaxy Research, sign up for our weekly newsletter at gdr.email, read our content at galaxy.com/research, and follow us on Twitter at GLXY Research. See you next week.